Alright, check this out. We've got a bullish divergence showing up on this indicator, which is a big hint that the price is probably headed up. If you jump into a long trade here, you'd have made some cash. On the flip side, the same indicator also flagged a bearish divergence, meaning the price was likely to drop. A short trade here? Yep, that would have paid off too. This is a turbo oscillator, and in this guide, we're diving into the nitty-gritty of it. To get this indicator on your chart, head over to the TradingView, the platform I'm using. If you don't have an account yet, there's a link in the description to sign up. First, pull up the 30-minute chart for GBP JPY. Don't sweat it though, this approach works for any asset and any time frame. Click on the Indicators tab, search for Turbo Oscillator by this amazing author, and select it. The Turbo Oscillator is a powerful tool that bundles a bunch of analysis tricks into one package. Its main job? Helping you catch trend shifts and possible reversal points in real time using divergences, momentum, volume signals, and other cool features. One of its standout abilities is spotting divergences as they happen. It picks up both regular and hidden divergences right away. A regular divergence is when the price and oscillator go in opposite directions. For example, in a bullish divergence, the price hits a new low, but the oscillator doesn't. It makes a higher low instead. For a bearish divergence, the price reaches a new high, but the oscillator makes a lower high. The turbo oscillator flags these mismatches instantly to hint at potential reversals. Hidden divergences? They're just the opposite of regular ones, as you can see in the visuals provided. Let's break down what this oscillator is made of. First up, you've got the regular divergence lines, those white lines you see. When they pop up, they're signaling either bullish or bearish divergences. Lines at the bottom means bullish, so the price might climb. Lines at top, bearish, so the price could dip. You can also turn on hidden divergences in the settings. Just double-click the indicator, toggle them on, and you'll see green lines at the bottom for bullish hidden divergences and red ones at top for bearish ones. Next, there's the signal line. This line gives you a heads up on trend changes and price flips. The dots on it mark when a trend shift starts, and their size shows how strong the new trend might be. It plays nice with RSI, stochastic, and MFI indicators to make sure you don't miss any market moves. There's also money flow histogram, which looks at a longer period for deeper market read. You can use it for extra confirmation when divergences line up with the signal line, making the signal even stronger. Then you've got arrows at the oversold and overbought levels. Those are predicted reversal zones. In super overbought or oversold markets, these arrows spot potential pullbacks and mark trend changes. They're handy for setting take profit points. Now let's peek at the settings. You can turn on signal line on or off, tweak the look back period for momentum, or add the smoothing to cut down on noise and make trends clearer. You can hide the histogram if you're not using it, like I am here. There is a status line that shows if the oscillator is overbought or oversold, plus options to enable reversal signals and more. Adjust as needed, then hit OK. Using this indicator to trade is pretty straightforward. This is a basic strategy to show it off. The idea? Combine divergences with overbought or oversold signals and reversal cues for solid trades. You'll know a market is overbought or oversold when the levels shift from gray to bright red for oversold or bright green for overbought. When these line up with divergences, it's a stronger signal. For a long trade, you need three things. First, a bullish divergence where the price makes a lower low, but the oscillator makes a higher low. Second, a super oversold market, shown by a bright red level. Third, a bullish reversal signal either right under the divergence or between it and the signal lines and dot. Picture this, put a vertical line on the divergence dot and another one at the signal lines end dot. The green arrow needs to show up on or between those lines. If it shows before the divergence, the signal is no good. Heads up, divergence is lagged by 2 candles, so you can't jump in on the signal candle. If you use bar replay, you'll see the divergence only appears after the signal line flips from red to green, with a tiny trend shift dot at the end. When all conditions are met, go long. Set a stop loss below the latest swing low with some wiggle room and aim for your desired risk-to-reward ratio. This trade, it worked out. Let's look at another long trade. You've got a divergence for the first condition and the oversold level is bright red, hitting the second. For the third, check between the divergence dot and the signal line's end dot for a bullish reversal signal, either right on the divergence or in between. If it shows up before the divergence, the trade's invalid. The divergence needs to come first, then the reversal signal. This trade paid off too. For the short trade, flip it. Confirm a bearish divergence where the price makes a higher high, but the oscillator makes a lower high. Check for an overbought market with a bright green level, and look for a red bearish reversal signal between the divergence dot and the signal line's end dot. Go short, set a stop loss above the recent swing high with some room, and target your desired risk-to-reward ratio. By getting the hang of these indicators, parts, divergences, signal line cues, and volume histograms, you can make the most of the turbo oscillator. It's loaded with features to spot trend changes early and guide your trades. Quick note, this isn't a financial advice, and no strategy is perfect. Do your own backtesting and forward testing to see what clicks. If this helped, drop a like or maybe subscribe for more. And make sure to watch the recommended videos on your screen. Believe me, you won't regret it. Thanks for checking it out. Catch you next time.